Can you please explain about hedge funds? Is it fair to assume that they trade on options? Not all of them do. Not all of them do. So a hedge fund is like a mutual fund where you can buy stocks, but hedge funds can also do the opposite of buying stocks, which is called shorting stocks. They can bet that stocks are going to go down and make money that way. Now, some of the more sophisticated hedge funds use a lot of options as well. So when I worked at a big hedge fund called Citadel, we used options quite a bit. And I've used options at basically every hedge fund I've worked at. But we don't make it our primary focus, or at least I did not. I like to use options as a way to protect my capital just in case a stock crashes. For example, let's say that I own a stock shares in Salesforce.com, ticker CRM. And I own a lot of it, and if I sell it, it might drag the stock down, right? If you're an institutional investor, you have big sizes, positions. So what I would do is I would spend a little bit of money to buy a put. And what would happen is if the stock drops, I make a lot of money and actually don't lose money because my shares go down, the put offsets it. If the stock goes up, I make money because the shares go up, but all I lose is this little amount here on the put. And there are much more advanced option strategies as well. There's straddles, strangles, iron butterflies, iron condors, etc. Check out my MBA program in the 4th semester in FA 44. That's Finance and Accounting Semester 4, Class 4. I have a 30-hour elective covering that. Yeah. Now the government goes after people that buy options, and there's a takeover. So a lot of hedge funds are now more sophisticated to the extent that if they think a company is going to get acquired, management won't let them invest in options in that company, even if they don't have any insider information. Because what happens is the government investigates you if you buy massive options right ahead of a takeover.